Hey everyone, I'm Josh Frank, co-founder and CEO of The Tie. Today we're talking about, is it possible to time the markets? And so why don't we go down the list? Can everyone introduce themselves?
Yeah, hey everybody. My name is Yuriy. I am the head of the brokerage, trading and lending operations at Anchorage Digital. Anchorage is a fully regulated digital bank. We are the first recipient of the federal OCC bank charter for a digital company. And our core is our custody platform, but we also have trading, lending, and other services where institutions can participate in crypto via staking, governance, and anything else any specific tokens have to offer.
Hi, I'm Sam Trabucco. I run a lot of Alameda Research's trading. Alameda Research is a quant trading firm and market making firm. So if there's a big exchange with real volume on it in crypto, then we're trading every product on it basically in a mostly automated way. And then we also do a lot of like market making type deals with like different projects, different exchanges, and also just providing is like one of our quant trading strategies. But yeah, so at Alameda, I like run a lot of our real-time trading, decide on our like deltas, and like make a lot of trading decisions for us, and do a lot of risk management.
Hey guys, I'm Joel Birch. I'm the CEO and co-founder of Stacked. We're an automated investment platform, soon to be one of the largest registered investment advisors with the SEC here in the US, launching a robo-advisor platform. Today, people use Stacked to automate trading strategies, largely from their popular, their favorite Twitter influencer or what have you. And so, yeah, people use Stacked largely just to automate longs and shorts on Bitcoin and ETH trading.
So we're focused today on Bitcoin specifically. And so my question to all of you is, what do you think are the biggest factors that affect the price of Bitcoin, and how has that evolved over time?
Sure, so I'll start on that question. So over the long term and broadly, what affects the price of Bitcoin is obviously adoption, and institutional adoption as well as retail. But institutional adoption comes in spurts, right? Even MicroStrategy, who was one of the first companies to invest in Bitcoin, it still took them about 6 to 8 months to go through all the compliance and all the legal work in order to buy the first Bitcoin. It's not like when a retail trader, for example, it's very easy. You press the button. But with institutions, it takes a lot of work to get to the very first time you purchase. So I think that is probably one of the main indicators for Bitcoin adoption on an institutional stage.
Yeah, so I think that what dictates the price of Bitcoin varies a lot depending on whether you're talking about long or short term. So long term, the price of Bitcoin, or like really anything, is just dictated by like net supply and demand. If there's like way more buyers than sellers over a long period, then like that's gonna dictate that the price goes up long term, and vice versa. And so I think that like the institutional demand has driven a lot of the longer term price action lately. Shorter term, we get in different paradigms. Right now, I think we're in a paradigm where short-term price moves are really dictated by like news and like news-like events, where news-like events can be like an Elon Musk tweet. And yeah, so I think the paradigm we're in right now is sort of something where like the market just really, really reacts quite strongly to anything that it perceives as like maybe about Bitcoin, which is like obviously not really bearing itself out longer term. Like these things keep reverting, but I think that's what we're like the mode we're in right now for Bitcoin's price.
Just to add to that, because I agree 100%, largely it's been sentiment driven from day one, right? Like at the end of the day, most people buy Bitcoin because they believe the price is going to go up in the future. There are a lot of people who are obviously in it for the tech and believe in some of the really revolutionary monetary policy changes that come as a result of Bitcoin and blockchain technology. I think all of us have some part of that in our heart. That's why we're here. But at the end of the day, speculation and and the hope that price goes up ultimately is what's going to play a factor, and sentiment, right? So social sentiment, something that the Tie is obviously experts in. Elon Musk tweeted 3 words earlier that dumped the market like 4%. So it's still super early, and ultimately it's going to be a lot of social sentiment that's going to drive the price up or down.
So from a short-term trading perspective, what are some of the key metrics or indicators that you guys are looking at?
Some of the things that you can look at, for example, is you can look at the perpetual swaps market, and if that's driving pricing, then you can expect that it's more institutional flow. If you see spot prices moving up rather ahead of the perps, you can see that it's like more organic growth. So I think comparing the derivatives versus spot trading, I think is a great indicator. And as the derivative markets become more and more liquid with more products, I think you'll be able to have more indicators that can help drive the price.
Yeah, so I agree with that stuff. One sort of idiosyncratic thing that I like tracking a lot, and I talk about this on Twitter a lot too, is you can sort of track like how many contracts have been opened like in a derivative product. So for instance, we might notice like, oh, there's been a ton of people buying into like the Bitcoin perps on Binance, and so the open interest for the contract might go up a lot. And this doesn't really matter, except if a lot of these people start losing on their positions, like if Bitcoin falls a lot, we might be able to sort of predict, oh, like probably a ton of people are about to get liquidated. And like we've all sort of seen the like memes about like, oh, liquidations are driving the market, like Binance is a casino or whatever, or like BitMEX used to be the casino place too. But yeah, so if you track like these, how large these positions get, you can sort of predict how big the liquidations are going to be, which can give you a lot of information about like how big is this crash going to be when it happens. It doesn't really tell you there's going to be a crash, but it can help you predict the size of the crash.
Yeah, and for those of us who don't have access to all the data in the world or don't have a lot of time to spend trying to figure out quantitative strategies, at the end of the day, is your Uber driver pitching you Bitcoin? Yes or no? If yes, sell. If no, buy. That's generally how I make all of my investing decisions. But no, that just goes back to sentiment at the end of the day, right? Like, I don't try to be a trader. We built Stacked because I'm terrible at trading, and I wanted to try to give people a platform to invest long term. So for me, when things start to get super frothy and the fear and greed index is all the way greed, it's usually a good time for me to average out a little bit, and the reverse holds true too.
And so do you guys think that Bitcoin is a macro asset yet? And if so, what will that mean for alts? And does that make Bitcoin more predictable?
You want to start?
Yeah, so I think that there's definitely an extent to which Bitcoin represents like a macro asset. So like maybe a few years ago, like before March 12th, 2020, basically, there was a lot of speculation, like, oh, like what will happen if there's a huge financial crash now that Bitcoin's bigger? Like, will it follow the market? Will it be a safe haven asset? Like, what's going to happen? And obviously, as we saw, like when the markets crashed because of COVID, Bitcoin crashed even more. And Bitcoin has really picked up a pretty strong like beta to like the S&P 500, for instance, meaning that like when the S&P moves a lot, Bitcoin tends to move a lot in the same direction. And I think that basically represents that like, yeah, like it's moving a lot with like the traditional markets, and like people view it as like having similar risks, basically. So yeah, and I think that like this is less obviously true for like random altcoins, for instance, that like your typical investor does not know about. And so I think that over time, as more institutions adopt it, and as it becomes more of like a traditional finance type asset, yeah, like you should sort of expect to see that the beta between Bitcoin and altcoins should go down. I don't think that's happened quite yet, just empirically, but it is what I would expect.
Yeah, and I'll just say it's definitely a macro asset. With Bitcoin at 59K, it's the third largest currency on Earth. Larger even than the Japanese yen. So ultimately, we are here now. We have $1 trillion asset class. Thanks to all of us. I think that's super, super exciting. And I do believe that we're going to see dampened volatility over time, right? Like as the asset grows in dominance, we're going to continue to see dampened volatility. And my theory actually goes beyond Bitcoin to the larger, at least majors, crypto market. I think that most major cryptos will continue to see dampened volatility as we go forward. There's going to be less upside, of course, but there should hopefully be less drawdown. And I would have told you 3 weeks ago that I don't think we're going to see a 60 or 70% nuke across majors, but I would have been wrong. So maybe we're still a little earlier than I think, but I I definitely think that we're at the macro asset stage for sure.
Yeah, in my seat, I see a lot of hedge funds, and when I say hedge funds, I don't mean the crypto-native ones, but more TradFi hedge funds that are starting to invest in Bitcoin. And I do believe that one of the major themes is obviously inflation hedging and having it be the macro asset. Now, when it comes to alts and versus Bitcoin, what I think makes Bitcoin great outside of any specific technological details about it, is the fact that there's no founding team. Satoshi Nakamoto is an anonymous person. There's nobody really for the regulators to really go after, and it has the mileage that it's had so far over the last decade plus, right? So I think that'll make Bitcoin really difficult to replace.
And so one of the things you brought up earlier was the fact that Elon can still impact the price of Bitcoin. And to me, that's crazy. We reached $1 trillion+ market cap for Bitcoin, and it's still this event driven. Do you think that will change over time? Do you think that events will continue to have this level of impact on the market?
I actually don't. I think we're going to see more of it because trading and investing has never been more accessible to regular folks, retail crowd. Crypto is part of that, but you're seeing it in the stock market. You've seen it with AMC. You've seen it with, all these different like meme stocks, if you will, right? GameStop or whatever the case may be. And most of that, again, is sentiment driven. And if your next favorite influencer starts tweeting about any easily accessible asset, whether it's crypto or a stock, you're going to see effects on the price. So as we get bigger, maybe those effects, again, are dampened. But I do believe that over the next 10 years, accessibility to not just crypto, but all financial asset classes is going to 10x, maybe 50x. And I think influencers are going to 10x or maybe 50x. And so as a result, I think you're going to see a lot more effect on the market from different main players.
Yeah, so I agree with the idea that over time there will be a lot more types of things that can impact the market, and I definitely think that we're not going to see news stop affecting the market, and in particular we don't that would be bad, I guess. And also, unlike every asset in the world, earnings in the stock market impact the market, and that's material news. And on some level, so is the idea that maybe Tesla's gonna dump. Which I do think that we probably the impact from Elon Musk saying something like this is way outsized right now. And over time, I expect to see the impact from a given thing to go down, but the set of things that have impact to grow.
And the Elon tweets are not anything new to markets, right? If you look at traditional markets, every time Carl Icahn tweets or Bill Ackman tweets, stocks move, right? The idea, I think, the most important thing of owning Bitcoin is just, don't take excessive leverage because, one of these tweets will send the market down and you don't want to get liquidated. You want to be able to absorb, any down moves, buy dips and just ride back up with it, right? So I think, lack of leverage, as a retail investor especially, can really help out, kind of just ride the waves of these tweets cause.
And so what do you guys think of this kind of new ESG concern that has kind of arrived? Is that going to continue to have an impact? And, Yuriy especially, how are traditional institutions thinking about that?
Yeah, a lot of the big banks, the big asset managers, traditional hedge funds, they all now have big ESG practices. And it is very important to them to really understand, what the Bitcoin's, impact is from that perspective, right? Now, if you really look into it, there are a lot of the energy being used by Bitcoin are actually coming from kind of very new sustainable sources. There's flare mining, there's hydropower, and you name it. The list kind of goes on. Galaxy just published a pretty interesting report about a month ago that compares the ESG impact of Bitcoin versus traditional finance versus a few other things, right? Mining gold, I believe, was their third comparison, which is a really interesting read where you can kind of go into that. And I believe technology will get better over time, and the energy efficiency of Bitcoin as well as other crypto assets will improve. You can make the same argument, for example, 15, 20 years ago about computers. Well, how much plastic is being used in giant, mainframes, or CRT screens and things like that? And now, computers are the size of you can hold it in your phone. The screens are, this big, so it doesn't create as much of an environmental footprint.
I mean, institutions are going to be doing fundamental analysis at a rate much higher than retail. So ESG concerns, environmental, social, governance concerns are more important to institutions than they are to most of us who are just, maybe taking some leverage positions or spot buying on Coinbase. And so they're going to be digging into things at a deeper level, no doubt. And the environmental concerns are valid, right? It is not cheap to mine a Bitcoin, relatively speaking. let's compare it to a Visa transaction like people might want to. But at the end of the day, as Jack Dorsey, the Twitter founder, was talking about just the other day, he believes, and I believe, that not just Bitcoin mining, but really most energy creation will come from renewable sources. I think Bitcoin will continue to head towards a place where we're doing a lot more renewable mining. And on the social side, like at the end of the day, here in the United States, we don't have this issue, and we're starting to see it, but we don't have the same issue as Venezuela or something when it comes to like hyperinflation. We don't have the same sort of issues. When you are a refugee and you're fleeing another country, you can't take your savings account across borders. So at the end of the day, like the macro thesis for Bitcoin holds, and I think institutions are looking at that at a deeper level than any of us, and I think it's a strong case for Bitcoin at the end of the day.
And so, Sam, I'm gonna point this one at you to start. But over the last couple of years, we've had these massive sell-offs in Bitcoin. Most notably March 12th, which we all remember when it sold off to 3.7 thousand, and more recently. And so, my question to you is, why do these flash crashes occur? And what can you do, and what infrastructure do you put in place to protect yourself against those?
Yeah. I'll talk about March 12th was like a very extreme version of this, but I'll talk about the one that happened a few weeks ago. So if you remember, on May 19th, I think, Bitcoin started crashing, and it was sort of crashing slowly, and then it got down to 40K from wherever it started, like maybe 50K. I kind of forget the numbers involved. But then once it hit 40K, it sort of immediately crashed like very quickly down to like 31K or something like that, depending on which platform you're talking about. And this is like super inorganic. The main reason that it happened, and that it always happens, is the effect I described before, which is that a ton of liquidations happened. So the reason that you can sort of predict this is that as Bitcoin was rising to 60K, there was a ton of buying, and in particular a ton of leveraged buying. And so when there's a sort of natural drawdown, or whatever reason you want to ascribe for it falling back down to 45 or 40K, maybe it was overbought, maybe Elon Musk did something, whatever. It was at least sort of organic. But once it hit 40K, a ton of the people who were buying up to 60K on leverage went bankrupt. And the exchanges liquidated them and sort of sent these market orders into the market, which no one wanted to sell. No one wanted to sell down to 30K. But it did fall down to 30K. And so something you can do to protect against this, obviously, is not use 100x leverage. It tends to have a high enough chance of getting liquidated that it's generally going to be losing on average if you do it many times, even though it has a chance to make a lot of money. But yeah, high leverage is basically the reason this always happens. And honestly, it's kind of predictable. When Bitcoin fell to 40K, if you're watching the open interest, you can know it's going to fall to 30K. And on the other side of that, because we knew no one wanted to sell the 30K, it's obviously an amazing buy once it hits 30K. Understanding these market dynamics are super important, both in trying to trade the event and also in trying to protect yourself from the event happening in the first place.
Yeah, just to add to that, whenever there's a lot of momentum trading, meaning Bitcoin's going up from 12,000, all the way up to 60 without really any significant pullbacks, the chances of a big drop really increase, right? And it always looks very similar, like Sam mentioned. There's usually a big dump in the market, and then it goes down low enough where the liquidations start happening, and the more levered players get liquidated first, and then it's kind of a cascading snowball effect. And then when all the leverage is kind of out of the market, it bounces back up a little bit, which is why a lot of these days, they kind of look like a square root sign, where it's like a big drop, and then halfway up it comes back, and then it's a little bit flat.
So where are we in Bitcoin's current cycle, and how can you tell when this market is too frothy or undervalued? And I think, Sam, you touched on that, but Joel, why don't we start with you?
I don't know where we're at in the cycle, but I do not believe the top is in, because tops don't look like sideways movement for 2 months before a sell-off. So at least in my experience, which is admittedly limited over the last 5 or 6 years being in crypto, that's not what top looks like to me. I would not be surprised if we saw a $100,000 Bitcoin if we're talking about specific price action. But ultimately, I do believe that as an asset, it's going to continue to appreciate in value pretty much in perpetuity, like you would see of any strong asset, like you would expect Amazon stock to do or anything else. What happens in the meantime, I'm not the expert on the panel here to discuss like the intraday moves, right? But for me, I'm going to usually try to buy when it goes down, and maybe make some sell decisions once it starts to get a little bit frothy or super greedy. But I would not be surprised to see $100,000 Bitcoin this cycle, and I know people on my team are a lot more bullish than that. I'd love to know what you guys think.
Yeah, I think I have an unsatisfying answer, which is I'm not sure. So basically, I think so I mentioned earlier that I think we're in a paradigm right now where short-term moves are dominated really heavily by news. So one thing that I am fairly confident about, at least on average, is that like last night or like yesterday, whenever, Elon tweeted again, causing Bitcoin to go down, and pretty much every time we've seen like a price move like this, it's at least partially reverted over the next few days, just because I think the market is just overreacting every single time, and so you'd expect reversion after an overreaction. So I basically think that will keep happening, at least if I had to guess, in the short term. In the long term, it's a lot harder to tell. I definitely think that there exists a case that Bitcoin is quite undervalued right now. But there also exist possible actually big events that could happen, which can at least stifle that in the medium term, in the year or two or whatever. So yeah, I basically think we have to wait and see how various regulatory environments develop and whatnot to really know what's going to happen over the next few years. And yeah, so that's not satisfying, but it is true.
Maybe one thing I would mention from my perspective, even on May 19th, a lot of my institutional client base, they're not selling their core positions, right? They're not thinking that, oh my God, we hit the top, there's a pullback, we better, lock in our profits, or, minimize our losses or whatever, right? That's not really happening. Sure, there's tactical trading going on around the core, but the core positions are not being sold by institutions by any means.
And so, one of the things that you mentioned earlier, and I think everyone's hit on, is just the over leverage in the system. And so, how do you protect yourself against all of this volatility, and all of this risk?
I'll start with that one. So, it's very interesting to hear the sentiment coming out from, regulators and governments saying, well, all these 100x leverage platforms are crazy. We can't have that. We got to, protect the investor. We can't do it, right? But if you think about it, it's such a self-reinforcing mechanism, because when you put up a huge leverage position and you get wiped out, it's kind of like touching the stove, right? You're not going to really do it again. So it really self-regulates, I believe. So I think it's important to kind of have these, the availability of trading a lot of leverage, because I think it makes the market more natural. During any of these big drops, no central bank had to come and rescue Bitcoin. It didn't fall apart. It just kind of, leverage washes out and it goes on its way.
Yeah, so Yuriy mentioned the self-regulating nature of this, and I do think that is what should happen in steady state, basically. So if every single person is making the best choices available to them in terms of how much money they make on average, no one should use super high leverage, basically, unless you have a really great trade for some reason that you're very, very confident about. Because basically people are putting on these really high leverage, basically coin flips, at least short-term coin flips, and half the time, yeah, you make a ton more than you would if you only leveraged up 2x by doing 100x. But the other half the time, you lose a lot because of liquidations. Binance just added liquidation fees too. These liquidations really cost people a lot more than they realize, especially when they're thinking, oh, I'm buying a ton of Bitcoin because I know it's going up. But even if you do know it's going up long term, short term, I think we've all seen Elon Musk can have these impacts. Regardless of the value of Bitcoin, it might go down the next day after you put this position on. You don't know. And yeah, so I think that basically, if people are doing the good decisions for themselves, they won't do this, to be honest. And yeah, so it should regulate itself pretty nicely.
And so my final question for all of you is, what do you think the big, events and narratives are going to be that's going to drive Bitcoin's price over the next 5 to 10 years?
It's inflation. That's the number one narrative. The dollar was invented in 1785, and 40% of all of the dollars in circulation were printed inside of the last 12 or 18 months. This is an issue that has, really taken hold in a lot of other countries, so we don't feel it the same way here. But all of your savings are losing value every day, and then on top of that, your bank is lending your money at a 20% interest rate and giving you a micro fraction of that. DeFi, blockchain, crypto, we solve for that. And I think inflation is absolutely the narrative that drives Bitcoin's price higher. And more importantly than even, again, intraday price, drives like Bitcoin and cryptocurrency adoption as we move forward, as we, debank, right? We decentralize finance.
I can just add a little bit to what Joel said about inflation. Academically and historically speaking, when you look at big money printing cycles throughout history, inflation is always a lagging indicator, right? So usually it's about a year and a half, 2 years where the inflation's really like seeps through the system and gets realized. So if you think about it, a lot of the money printing kind of happened from April, I want to say to September is where like a lot of the money that Joel mentioned kind of came in. So really 2022 is I think where it's really going to start hitting, and I think people and hedge funds and asset managers are going to look to get into more of an inflation hedge asset like Bitcoin.
Yeah, I definitely agree that inflation will be a big effect. I think there are other potential big effects that could materialize, might not. Like there are things like regulatory landscapes. Like what if the U.S. really changes its course on how it's deciding to regulate crypto? That could be a very big event that could dictate a lot about Bitcoin's price action. Same thing for a few other countries that matter quite a bit. And then I think this isn't exactly a price thing, but I think the way that volatility will evolve really depends on how the exchanges work. To the extent that these high leverage situations still exist and all these liquidations are still happening, I think that volatility kind of can't go down. It's a lot of the volatility is caused by these liquidations and this momentum that happens because of it. So yeah, it'll matter a lot how the exchanges develop in terms of whether Bitcoin still moves up around a ton or whether it's a little more stable.
Awesome. Thanks, everyone.
Cheers.
Yeah. Thank you everybody for attending. Thank you.